Namaste friends, welcome to the channel Equity Educator where you learn how to make profit by investing logically. My name is Yatin and will guide you to do profitable investment analysis. If you are new to the channel then like, share and subscribe the channel. This video is purely for educational and learning purpose, so do your own research before investing. Remember, you can make profit from stock market if you have patience and investing in fundamentally good companies. Penny stocks are not wealth creator but destroyer, so do not get trapped for such stocks. Today we will look upon the chemical industry and we will talk about five shares which are very attractive at current levels. Post budget and recent corrections, these are chemical gems. First stock is Hikal Limited. The market capitalization for Hikal is 5,299 crore. 10 years back it was only 476 crore. 5 years back it was 965 crore. The stock P is 28.5 and earning per share is 15.1. So we can see that the market capitalization has grown more than 10, 12 times over last 10 years. The management is excellent for Hickel and they all are technocrats with having lot of experience in chemical industry and chemical education background. If we see the current performance of the company in the latest quarter, we can see that the company is maintaining a decent 21 to 19% operating profit, where most of the companies where they have seen the margin challenge, this company able to maintain and sustain their margins intact. We can see the profit and loss for last 10 years. They had a sales of 539 crore, which is constantly increasing over the period, and now it has reached to almost 2000 crore. So here we can see the potential of this company. Let's see the shareholding pattern. The shareholding pattern we do have FIIs and DII. Go and see in which segment this vehicle is operating. We can see it is operating into pharmaceuticals, crop protection, specialty chemical, and it is also doing research and technology things. And we have seen that in the budget, government has focused on the agriculture sector and pharmaceutical sector, as well as because of China plus one strategy, we are giving PLI scheme to chemical sector also. So if we invest in this company, we can able to make a decent profit. And we can see that the stock has corrected decently of late because of this sell-off in the equity market. But now we can see the reversal is happening, like it reached to 377, but it is now going up from the low, which was 377. So this is the right point where we can do the investment. We can also see the PE ratio has gone very down, so it can reach out to the PE what it was earlier to 40 to 50 Ps. Now we will look upon the second company, which is the Advanced Enzyme Technologies. This company is involved in making enzymes, catalyst, which is used for increasing the performance in many sectors, like it is in textile, it is in chemical, it is in food processing, it is also in pharmaceutical. So market capitalization is 3,800 crore 10 years back. It was not listed, so we do not have that data with us. The PE of stock is 30 and earning per share is 11.4. PEG ratio is 2.2, which is good. Industry P is 28.3. Now we have seen that this stock has corrected majorly, which is the only enzyme manufacturer in India. So we have a growth potential over here. If you see the recent performance of the company, it maintains a healthy operating profit margin of 39 to 37%. So here we can see that the company has not faced any raw material increase or margin pressure, which other companies have faced, like Deepak Nitrite or RC Industries. However, those companies are very big in size. But if you see the growth performance, sales, and net profit of the company, it has increased many fold. 10 years back, it was 116 crore. Now it is almost more than 500, that is 531 if we talk about trailing 12 month. Profit has increased from 17 to 127. Now we will see the shareholding pattern. Pattern, promoters are having 52%, FI is having 16%. So major portion of the company is holding by FII and DII is also holding 8.99%. Now if you look up on the segment where this company is working, so we can see that the company is working on the human nutrition, is also increasing their focus on animal nutrition. So it is also present in food processing and non-food processing, which is basically the textile industry. So now we go to the third company, which is Camcon Speciality Chemical. The market capitalization is 1,350 crore. It was not listed, hence we don't have 10 years back or 5 years back market capitalization of the company. Stock P is 22, which is very cheap at current level. EPS is 16.4 and PEG ratio is 0.29, which is excellent because this is very high. This denotes what is the growth plan of the company is. So if I see the revenue in the current quarter, we have maintained the 31% of margin. At the same time, there is a slight increase in sales also. So company is doing well quarter on quarter. Let's see the annualized result for the company. So company was only 22 crore 10 years back, but now it is 255 crore. The operating profit margin has also increased from 12% to 32%, which is very good. And if you see the net profit of the company, it is almost grown 60 times in last 10 years. If you see the shareholding pattern, promoter is holding decent 74.47 and FI has invested 0.2% in the company. DI has invested 0.68%. Remaining stake is with the public. Now we'll see the segment where this company is working. So this is working in the oil field chemical. It is also working in pharmaceutical chemicals. It is also working in saline and doing contract manufacturing. The best part of this company is that it is into silanes and these are chemicals which will be used in the electronics and IT equipments. So you can see over here that see it is used in electronics, which is emerging sector, and government has focused towards the electronic and semiconductor segment and has announced the PLI scheme on this. So this will also have a good impact on the sale of Camcom because the company is one of the leading manufacturer in this segment. Now we can look upon the fourth company, which is IOL Chemical and Pharmaceutical Limited. Market capitalization 2,623 crore. 10 years back it was 99 crore and 5 years back it was 429 crore. So we can see that the company has grown many folds. The stock P is very attractive, 11.8. Earning per share is 36.3. Return on capital employed is very high, 54%, and return on equity is 43%. So you may be thinking why this stock is available at such cheaper valuation. So during COVID, there was an acute shortage of ibuprofen and which is a painkiller, a non-steroid painkiller, and this company is also into manufacturing of API, bulk manufacturer. So when COVID situation was there, the ibuprofen had a shortage and IOL Chemical is one of the leading manufacturer not only in India but in the world. Approximately 35 to 40% of requirement of ibuprofen. So that time because of shortage, the price of these ibuprofen has went very high, and you can see same thing which has happened over here to this share price of here. Earlier it was trading at 240, 50, but due to the time of COVID, which is over here, you can see the increase in price has led to the increase in the share price. Now everything is settled down and now the volumes and businesses being picked up. So we expect a re-rating of this company, and P will increase, and that will reflect in the stock price. We can see the quarterly performance, so that will be quite visible. You can see that because of the sudden decrease in ibuprofen price, which was earlier very much in these period 20 and 21, their profitability and sales went up. But soon, when ibuprofen price was settled down, or we can say came down, then it got impacted in the share price and profitability. But now, when it is settled, it has again started to going up. We can see that from 8% it has gone to 11%. If we see the annualized performance, the company has grown from 347 crore to 2000 crore in last 10 years, and the profit of the company increased from 10 crore to 213 crore in trailing 12 months. We can see that during the COVID period, because of high ibuprofen price, the profitability has much higher, but this is not sustainable, and it will settle down somewhere around 22 or maybe 20%, which is good for a bulk manufacturer. Now we will see the shareholding pattern. So promoter is holding 43%, FI is holding 3%, and DI holding is 5.5%. The rest of the holding is with the public. Let's see the segment where the company is. As I said, it is into the API manufacturing, it is into the specialty chemical also. So specialty chemical is something where company is entering, and because of this high margins in specialty company, oil company is expected to do better in coming times. So I was talking about the ibuprofen, so you can see about this. The company produces the most of the ibuprofen product. You can see ibuprofen, and these are the API under research. You can see that these are also segment where this company is about to enter, and these are the completed one. So we'll go to the fifth company, which is Laxmi Organics. The market capitalization of Laxmi Organic is 12,582 crore, and we don't have any data for 10 years back or 5 years back because it is newly listed. This company is into acetyl and ester and other specialty chemical, and it is only manufacturer in India for acetyl related product, ethyl acetate related products. Stock P is 53.5, earning per share is 8.9. Now we'll see how stock has performed quarter on quarter. So we can see that because of the raw material cost increase, the company has not done well in September quarter, where most of the chemical producers have not achieved good numbers. Same with Lakshmi Organic, but now when things have settled down, the margins are getting picked up. So now the stock price, which was beaten down because of these things, you can see that from 6,600, approximately from 600, the company has came down to 400 on an average. Now it has picked up and it is on uptrend. It will again reach back to 600 very soon, maybe in 2 quarters time or maybe in 1 quarter time. Now we'll see the annualized performance of the company. So in March 16, the sales was 1,047 crore, which has increased to more than 2,700 crore at present, and net profit has increased from 27 crore to 235 crore. So we can expect similar return. Uh, Promoter stake is 72.92%, FI is 0.33%, and DII is 3.28%. Rest of the stocks are with the public. Rest of the stock are with the public. Now we can see the business segment of the company, which is primarily into two, which is acetyl related and specialty intermediaries, which company is making. So in acetyl, they have both type of product, which is solvents and aldehydes, And then in specialty chemical, it is in diketene derivatives, esters, amides, and arylides. So company is the only producer for acetyl intermediaries in India, and it also exports majorly in European region, US region, China, Singapore, and Middle East region. So in coming times, we can see that these five stocks may do very well. Thanks friend for watching this video. Please like, share and subscribe the channel to get more such short analysis video. We'll meet you again on my next video. Thank you.